Hello, everyone. This is Ray Evans from Polaris Capital Partners. And today we're going to start a series. We're going to call it Ray's Talk. And we're going to be talking about various mortgage products. I work for a mortgage broker, and we have access to, reverse mortgages, non-QM product, all kinds of different solutions to help clients. So today I was going to talk a little bit about reverse mortgages. And let me just share the screen here with so everyone can see and how they could help seniors, people over 55 years old. So let's jump right into it. Reverse mortgages, basically we're all looking at how to prepare for the cost of aging. There's a lot of fixed income, a lot of equity out there. Um, so this is an opportunity to unlock the home equity in your home your home. It's a owner occupied is what it would be, your owner occupied home. So let's jump right into it. So what if your home could pay you back? Maybe you've been in there for 30 to 40 years and you're sitting on this asset and you want to get access to that income, to that equity. Many seniors, right, are house rich but cash poor. Um, Home values, especially in the Bay Area here, we're talking, San Francisco, San Jose, Peninsula, Bay Area here, California. Values have risen dramatically, and there's a lot of people sitting on free and clear homes. Seniors hold over 14 trillion in home equity, which is just, unbelievable right now. So there's a lot of possibilities out there. Um, Let's move to the next slide. So what is a reverse mortgage? I mean, basically, it's available to homeowners age 55 and older, converts home equity into tax-free cash, and the there's no required monthly mortgage payments. If you don't want to make that payment, it will go on the balance, versus say a HELOC, a home equity line of credit. Home equity line of credit, that is an available product, but that's a full documentation um, loan. It's a second mortgage. It can be a first also, but you make the payments and you have to qualify. With the reverse mortgage, you qualify mainly on age, your age, and the equity in your home. Um, and that's a key point. And also, you keep ownership of your home. That's sort of a misnomer that your property, would be taken from you. That's definitely not true. A lot of things have changed in the industry, and it's totally a safe product. Ways to receive the money. You can get it in lump sums. You can get it in monthly income, growing lines of credit, or combination options. Um, the product types, there's different product types. There's a reverse mortgage first, where basically, if you have a home free and clear, you could do a reverse mortgage first and take money out. You can also do a reverse mortgage second. Say you have a first already and you want to keep that first because maybe there's a low interest rate. You can have a reverse mortgage second, maybe for some home improvement or whatever. And then there's the reverse mortgage purchase. You could actually buy a home with a reverse mortgage and not have to make a mortgage payment. Basically, it's a downsizing situation typically. You're selling your home, whatever it may be, 2, 3, 4 million, and maybe you're going to buy a place for 1.5, and you're going to take some of that equity and put it into the purchase and then have the option of not making a mortgage payment. And then the rest can go in the bank, where you can, gain some interest and or whatever you'd like to do with it. And back to that first mortgage, if you have an existing mortgage, the reverse can take out the existing mortgage, and then the whole mortgage becomes a reverse, and then you don't have to make that mortgage payment if you do not want to. Moving right along, here's sort of an example of some of the loan to values, how much money you can get. And again, it's based on age. You can see here, um, 65 years old, basically 36.6%, 75, 43, 85, 54, and 95, 69. So just a quick simple example, say 85 years old and you have a free and clear house for $1 million, you could basically roughly get about, a little over 500,000, which, you can use that for whatever. You can use that. um, for medical needs, vacations, home improvement, helping out the grandkids, get their own home. There's a lot of options, of course, um, that the money could be used for. And here's just a simple story. Jane here, she's 72 years old. She has a free and clear home paid off. She becomes ill and she needs in-home care. That's one of the big reasons for a lot of times for reverse mortgages. Home term, long-term or care in home, everyone likes to remain in their home, can be anywhere from 10,000 to 15 to 20,000 a month. So she's using a reverse mortgage to supplement her income because she's on fixed income, Social Security, a little pension, but she's drawing from her retirement. And the whole idea is why take from your retirement when you have this fixed asset, your home sitting there, let your retirement income stay there and grow, and tap the equity in your home. And basically, she stays independent and stress free. Some common myths that are false. The bank takes your home. That's just not true. It's just like a regular mortgage. The bank becomes the mortgagee, which is, again, just like a standard mortgage. But as soon as whatever, if you get out of the reverse, you pay it off and the home remains, in your name. Of course, when you do pass, when the person passes, the reverse mortgage has to be paid off and the family would take care of that. They could take over the home if they want. They just need to go through all the process. Um, but the reverse mortgage would have to be paid off. And just like it says here, the next bullet, your kids lose everything. Again, that's not true. Um, the kids, whatever how the estate plan's set up, they'd be the beneficiaries, and they have the option of either selling the home and or taking over the home. But of course, the reverse mortgage would need to be paid off and you can be kicked out. Again, that's a misnomer. As long as you keep the property, in good condition and pay your taxes and insurance, just like any other uh, mortgage, there's not any problems, with the reverse. Let's see here. Who it can help and who may not. I mean, it's good for long-term homeowner solutions, helpful for cash flow planning, like we talked about, because a lot of seniors, right, we're on fixed income, Social Security pension, and need more time, money to take care of needed expenses. Maybe not ideal for short-term moves, um, but more for sort of a long-term decision. Why we care. We support the aging with dignity. We encourage financial literacy. We're all about education. That's why we're on the line right now. And we want to protect families in our communities. I'm in Belmont, and we have a great community. You see here is Rotary. I'm a member of the Belmont Redwood Shores Rotary, and this was a presentation we did for a group of our Rotarians and some others for Rotary Means Business. And it's all about, getting the word out to the local community, share ideas. So key takeaways, home equity is a retirement resource. Reverse mortgages are a planning tool. Talk to your financial planner. Um, and we can, collaborate on various ideas. And education leads to better decisions. So that's why, again, we're on the call today. And I hope this helped a little bit. There's much more to talk about, but I want to just give a quick rundown of how the reverse mortgage works. I've been doing this for 24 years. I can be reached on my cell phone, 650-576-6531, 650-576-6531. I have a website. It's my name, rayavanzino.com, RayAvanzino. I thank you for your time and look forward to sharing some more ideas in the future here.